So you want to know about tax lien and tax deed investing? Well, my friend, you've come to the right place because I've done both for a long time. And I'm here to give you the skinny on both of those opportunities, which can be great opportunities, but they're absolutely full of pitfalls for the unwary, unsophisticated, and unknowledgeable. So please do not walk into this not knowing what you're doing and putting down your money because you're looking for trouble if you do that. But if you know what you're doing, there's good opportunity. So let's first break up the difference between tax lien investing and tax deed investing. They're really two completely separate things. Tax lien investors are really looking for a yield or an interest rate on money that they've invested. Very rarely will a tax lien investor ever get the property because what they're really doing is they're paying the taxes, and the owner, if they want to keep the property, has to pay the taxes and then plus interest to the person who bought the tax lien, which essentially was paying the taxes for them. And these interest rates can be very high. I mean, in one state, it's 36% interest rate, which is really high. Usually they're not that high, but one state has 36%, another state has 25% penalties. That's Texas, has two of them. So you could make up to 50% in a year. So that's one side of it. But tax lien investing, the biggest thing for you to know is that is an interest rate investment, and it is not a way to get properties. Tax deed investing is a way to get properties. Tax deed investing is where someone doesn't pay their taxes, typically for 3 or 4 years, and then the local county will sell the property to collect that tax money. And that is a direct way to get properties. Now, even in tax deed investing, there are situations where you do not get the property. Now, how would that work, you might ask? Well, there's some places that have something called a right of redemption that essentially means that they hold an auction, they get a high bidder, and then the person has a certain amount of time to pay the taxes off, pay the person who was the high bidder some extra money, but the person's high bidder won't get the property. An example of that is Georgia. So in Georgia, there's a 1-year right of redemption. So if you held the sale on January 1st, it isn't until January 1st of the following year that successful bidder would get a deed to the property. And assuming the person redeems, meaning the property gets sold on January 1st, and they may say, well, I'm going to save up my money and pay those taxes. What they would have to do is pay the successful bidder at the sale what they paid, so they get fully reimbursed, plus 20%. So that could be good. If someone pays you off pretty quickly, you get 20% back pretty quickly. But for the most part, in tax deed states, they're not going to redeem the property. They don't have the ability to do it. They couldn't pay their taxes. How are they going to pay the taxes plus 20%? So typically that's not what's going to happen. So tax deed investing is the way to get properties. Now, tax deed investing in itself has pluses and minuses. The minuses, in my view, are number one, it's complicated. You're taking a property in a forced sale situation. People sometimes hire lawyers to try to undo the sale. The way the court systems are set up, they'd rather give someone their property back. And so the tendency of judges is to side on the side of the homeowners losing their houses. So you're not in a great position as the investor. Now, generally, you'll get your money back, but that's not what you wanted. You wanted the house. And there are also other issues that come with them. Like, for example, in some sales, like the Pennsylvania upset price sale, which happens the third week in September all over Pennsylvania, those things come with mortgages and other liens. So if there's a mortgage on the property and you buy the property, you're taking it subject to that mortgage, meaning if you don't pay off that mortgage, then the mortgage company can foreclose. And there are other things that happen, like IRS liens that cause their own problem. People filing bankruptcy after the sale, that can cause a problem. I had that happen to me in a property I bought, where I bought the property, the person filed bankruptcy, and then they repaid me over 3 years. They paid me the money back for what I bid plus a little bit of interest. But that wasn't what I wanted, and my money was tied up for a long time. So these things are complicated, and you really need to dive deep to understand them. Now, I will tell you there's a better third way that I'll tell you about in a minute that is a really interesting way to buy these things. But the traditional way of investing in tax deeds, it just takes a lot of expertise. I did it for many years. I know how to do it, but I can tell you it takes a while to build that expertise, and you have to pay someone to teach you. Way back in the day, when I paid a man to teach me that kind of investing, I paid him $7,500 That was back in 1989, so it was a long time ago. So it was a lot of money back then. I paid him $7,500. He showed me the ropes, and I had great success from there. I made it into a whole career, and it was wonderful. But it took me a good 6 months to get on top of it and really understand how it works. And then in doing the business of tax deed investing, it took me another couple of years to really understand it fully and to run into enough issues that I got it. So don't think that it's something you casually are going to go into. If you walk into it casually, you're going to get your head knocked off. It is not the thing to do. But if you're going to take it seriously and really understand it and learn it, it's a great field to get into. Now, I would tell you, if I were starting over again today, I would go for the mortgage foreclosure auctions before we would go to the tax deed foreclosure auctions. The reason I say that is that the tax deed properties are generally not in very good condition. Because if someone can't afford to pay their taxes, they also can't afford to maintain the property. So you get roofs that have gone bad, you get leaking that hasn't been stopped, you have heaters that don't work, you have all kinds of problems in houses just because people are short of money so they don't do the repairs. And also if they're losing the house anyway, they're certainly not repairing it. You're going to find that if you approach the mortgage foreclosures, they tend to be in much better shape, they're not so rough, they are not typically as run down, they're typically in better neighborhoods. So given a choice of the two, I would generally prefer to go for mortgage foreclosures rather than tax foreclosures. I also find that the situations are a little simpler in the mortgage foreclosures. Tax foreclosures, you're often in a situation where, great-grandpa owned a house, he died, heirs were living in the house, and they maybe paid the taxes for a while, but then eventually stopped paying. So maybe 10, 15, 20, 30 years later, that finally this house is getting sold at a tax sale, and it's just messy, that's all. And that messiness can impact you as an investor because sometimes you get dragged into complicated situations. So I would prefer the mortgage foreclosures where probably they bought a house, fell into hard times for whatever reason, and now the house is getting sold by the mortgage company. Generally going to find they're in better condition and probably more suitable for a beginner, although also nothing to walk into if you don't know what you're doing. You really have to spend time studying this and learning it. So I would suggest if you really want to get into those things, you learn from someone, and I've got a guy for you, because don't we all want to say that? I got a guy. So I have a friend of mine who is a world-class expert in tax deed investing. He also knows the mortgage foreclosure, although he's more focused on tax deed. He's a great place to start because he found a different way of doing this that gets rid of most of the complexity. And essentially, he gets lists of properties that are ready to go that you don't have to even compete with another bidder. You can literally get pages and pages of printouts of houses that are available, typically just for the taxes that are owed. No competitive bidding. You can take your time. You can look at things leisurely. You don't have other liens that are going to come up and bite you. Really much, much simpler. And I recorded a short interview with him. It's 15 or 20 minutes. It's free right here on YouTube. If you look down below, you'll see my interview with Tony. Just click on that because Tony really spilled the beans. He gave me great information, and he actually gave me things I didn't know about because I had been tax deed investing the traditional way for many, many years, and I didn't even know about the second way that Tony discovered. And Tony is the master at it. He's been doing it for a couple of decades. He's acquired thousands of properties, and he really knows the stuff, and he teaches it. So definitely go check out that video. And the second thing I would say is I would encourage you that if you take this seriously, and you really dive into it, there's great success to be found. I'd also warn you that if you don't take it seriously and just sort of go in there and just bid because you're impatient, then you're probably going to lose your money. And you'd have way more fun going to Las Vegas for a crazy weekend than you would dealing with an annoying real estate deal that doesn't work out. So if you're just going to go put down money at a real estate foreclosure auction, like tax foreclosure or mortgage foreclosure, save your money, have a better time, go to Vegas for the weekend. But if you're a serious businessman or businesswoman, take it seriously, and there is great opportunity. And I would suggest that you definitely check out Tony's method because it is far and above better than anything I've ever seen. Nobody else teaches it that I know of. And Tony is the guy. He's bought thousands of properties. He's still active. He is absolutely the guy. He's the guy that I call when I have a question about tax sales. That's how good he is. So click on that video down below. And also, if you have more follow-up questions or things you're interested, put them down below. I go through there with my staff. We kind of gather those questions together, and we use those for ideas to do new videos. And we can't get to them all, but I really try my best to get to them all. And so if you put a question down there, there's a good chance that I'll do a video on that. We'll put it up here and it'll be your question getting answered. So I'd encourage you to do that, and definitely click on the link to Tony's video. You'll see a nice 15 or 20 minute video here on YouTube, and it'll give you the pathway to go to actually making that your business. And I will tell you, I've done really well with this. You can too. Just take it seriously. So this is attorney and investor Bob Diamond. Thanks for being here today. Click on the Tony video and I will see you over there.